The healthcare REIT industry has been in the news a lot in the past month, growing very rapidly. And obviously one of the largest consolidators has been healthcare REIT. And I have with me Chuck Herman. He's the Executive Vice President and Chief Investment Officer of healthcare REIT. And in terms of the number of transactions that you guys have recently announced, you know, when in the timeline did you realize, because this is a large increase, when did you realize that this volume was going to really pick up for you guys?
What was interesting is that, you know, we've had a lot of capital market support over the last couple of years, and there was a lack of alternative capital out there. So when we, you know, really were reviewing the market and trying to figure out what our strategy was going forward, we felt like it was a good time for us to move on things. So really, you know, early last year, we had already targeted who we wanted to do business with. We were able to successfully do the Merrill Gardens transaction, which gave us a lot of credibility amongst operators in the marketplace, and that opened up some other opportunities for us.
So you think with that, when that one was announced, that kind of got the ball going?
I think that at the time, the potential tax changes that were going on, and the lack of available capital, all of those things contributed to it. Plus the fact that the private equity folks and people in that industry, were coming into the end of their fund lives and some of the assets that they controlled, and needed to find some type of exit, and that also, I think, has spurred things.
And then of the 5 deals that you've announced so far this year, 3 of these 5 have been I say the so-called RIDEA, because you can do it without using that technical structure, but have been the RIDEA structure. Is that going to be kind of your favored structure going forward, or deal by deal specific?
It's going to be deal by deal specific. We have a target portfolio allocation on how we look at the world. We think 25 to 30% of our portfolio, maybe going up as high as 35%, will be in the RIDEA format. We still like the consistent cash flow, the triple net lease world, which is what we did on the Genesis transaction. So, and we try to do a nice balance of the two.
But when you look at that, how much of it is, I think the timing for seniors housing is good because they're pretty much coming out of a bottom occupancy-wise. So in theory, NOI growth should start ramping up. So is it, as opposed to 2.5%, 3.5% lease escalators, that's your return, versus you say, geez, this company is going to be ramping up. I'm going to get 5, 6, 7% NOI growth. RIDEA makes more sense from your growth perspective.
For us, we look at things. We look at what the operator wants to accomplish. So, part of the time it's we try and figure out what the structure works best for that organization. We also look at the characteristics of the organization. Is it a stable organization that we can add it in the triple net lease world and just kind of move on, or is it something where the company has some pretty significant growth plans and they want a capital partner to help them grow? We tend to try and deal with growth companies, but each portfolio, each operator, each group of investors has a different set of objectives, and we try and fit the capital plan to their specific needs.
And if you're looking at one and you can decide to go with the operator, it's okay, you can go one way versus the other. I assume you do price them differently, and that the sale leaseback would be priced a little lower than a RIDEA transaction?
Well, in all of our deals, we're trying to figure out what is the market returns out there, what does the market require to effectuate a transaction. We build in more coverage on a sale leaseback transaction versus a RIDEA transaction, in that we're going to be participating in the upside of the cash flow on the RIDEA deal.
So it's all yours.
It's all ours, at least on that portion of the portfolio that does that. So each deal, is specific to what's going on in the marketplace. Where do we expect to be able to price the capital? What are the needs of the operator? How much debt and / lease financing are they able to successfully manage? There's a lot of different factors that go into it: the size of the portfolio, the quality of the portfolio, a bunch of other things.
And how does, with healthcare REIT and some of your competitors, you're getting so big and you have so many assets, so many companies, and I know you in particular have historically liked to pretty much have all of a company's assets in business. How do you deal with your new size, the geographic overlap when you have your portfolio companies are kind of bidding on the same 5-property potential acquisition, and you're their capital provider, and they both come to you, say, "Hey, can you finance it?" How do you referee something like that?
Sure. We face that issue all the time because we've got 65 plus operators in our portfolio and 50 acute care systems in our portfolio as well. And it really depends on a lot of different factors. How we referee it, we got great communication with our operators. We're talking to them all the time. We're actively involved in meetings with them very frequently. We're constantly talking with them about what their plans are, where they expect to go with things, what do they want to do. So, to date, it's been a pretty successful management strategy. All of our colleagues realize that there are going to times going to be some forms of conflict as far as that needs to be resolved, and since you have a good relationship with them, it tends to work out pretty well. We also have done a pretty good job at being geographically diverse, and I think that has been helpful as well.
Let's switch gears a little bit. With this RIDEA structure, your investors, are they focusing more on the economic benefits of growth that's going to be accruing to you, or are they kind of looking at, geez, we like to study 2.5%, 3.5% lease escalators. I don't know about this NOI that may go up and down. Which way are they looking at it?
The investor community has been very receptive to what has occurred in the last couple of months as we've gone and done a bunch of these transactions. They like the quality of the assets that we have acquired. They like the operators that we've done business with. So we've felt that it's been pretty successful in that aspect. We've also tried to balance it too. If you look at the Genesis transaction, that's a triple net lease, sale leaseback, with very nice yield, and compare that to the RIDEA transaction. It's been a very nice balance of the two. So generally they've been very receptive. We did one of the largest equity offerings in REIT history recently. Very well received in the marketplace. So we think that the market likes what we're up to.
Mm-hmm. And finally, you have the option to buy companies or portfolios, and you have the option to buy another REIT if that ever comes up. Is it cheaper to buy, in this kind of market environment, is it cheaper to buy the REIT that already has everything, or is it cheaper to buy the companies right now?
Well, with the lack of a lot of different forms of capital for the private operator, right now it's easier for us to go out and buy, and more accretive for us to go out and buy the private market transactions versus the public market transactions. Now we look at everything, we see all the deals that are out there. We are pretty granular in how we look at the industry. We've got a lot of different operators that we can partner up with different assets and different deals. So we find generally that currently in this market that the private transactions make the most sense for us.
So will you be seeing more of these in the near future? I'm just kidding. You can't answer that.
Sounds good.
Well, congratulations. That's I know there's been a lot of people at Healthcare REIT who have been working very hard the last few months.
Teams worked very hard. You're right.
I hope you get some rest, but I'm sure this will not be the end of your deals.
Well, thanks, Steve.
All right,
Appreciate
thanks.
it.
All right.